a half hour,
Perfect. Yeah, we're up.
go over things.
Guys, sorry for being a little late there.
Yeah.
Yeah, we're sorry we're a little late, but we got a good live for you guys today, so we'll jump right into it.
Got caught up in some banter. All right.
How's everyone doing this morning?
What's up, everyone?
Finally got some nice weather, so we can relax outside now.
Oh man,
the trees are finally. I know the trees are finally starting to blossom. And
yeah. Do you have nice trees in your area? Like, do you have like those trees that have like the pinks and the whites and everything?
Yeah. This should go a little bit pink. This one should go a little pink. Yeah, we got a couple over here.
Oh, yeah, that's fun.
Yeah, then we got the rainforest in the back there. So
you have a rainforest in the back? What?
Well, it's the ravine.
Oh, okay. Yeah.
Yeah.
You back onto that.
Yeah. So guys, what's going on? We're going to we got a good live. Let's jump right into it. What do you want to talk about first, Sean?
Yeah. So okay, what I was thinking was sorry, Jordan. I'm just getting our post set up here. Yeah. Trying to get more eyes on us, guys. We want to grow this community out. So, just working on that slowly. Siddharth, what's going on, man? How you doing?
Siddharth, great
setup, eh?
Great to see you out here, man. Great to see you. So maybe we'll talk about first the long weekend and how we're going to structure a trade around that.
Yeah, let's definitely do it.
Okay.
So what do you like? What do you usually do around long weekends, Jordan? Right, like a lot of people, they kind of panic and they close out their positions, or there's a lot of stress going into these long weekends. I feel like a lot of people think there's gonna be big moves when there's long weekends, things like that.
Yeah, I mean it's you're away from the market for 3 days. We have to remember as well that on Monday, the world doesn't close down, right? The world's still running, and we have the USA though that is closing down. So there's still going to be volatility across other countries, and if we and if you hold a position on Monday, it might be hard to liquidate, right? So you're going to be there's less liquidity, and so a lot of people close out some positions or buy some puts to hedge their overall portfolio.
Yeah, exactly, right? So what's the trade, man? Like what do you usually do?
Yeah. So I like selling the macro vol, so the S&P volatility. I like to sell that. And nowadays here, let me share my screen actually. Maybe we'll talk about it before I share my screen. Nowadays we have the the S&P has basically every other day is an expiration for the S&P.
Yeah.
So you could sell volatility that just expires on the Monday or on the Wednesday, right? So I think those are usually good trades to put on for these events. You're just capturing that excess risk premium, holding it over the weekend there.
Okay, yeah, no, that makes a lot of sense. So like what you're basically saying is, a lot of people, because they're away from the markets, what they're going to do is they're going to buy some sort of protection, right? Yeah. Because when you do get these big moves, it does happen after hours most of the time. It starts after hours, and especially for like big funds, things like that, people don't want to take on that risk, right? Even if there's not necessarily going to be anything happen, they don't want to be taking on that risk. So they're going to buy. What you're saying is you're going to have an influx of people buying protection today.
Yeah, just to cover their ass for the weekend. I mean, like, they're going to pay only a little bit of money just to protect themselves, to buy maybe out of the money put. And so we can sell that to them. Or we can say, okay, you know what? You are being conservative. That's awesome. And we can take advantage of that, right? You pay us a little bit of a premium, and we'll capture the risk profile there. So if we see here, we actually have options expiring on Tuesday.
Yeah.
May 26th. So we could sell those options, right? Those options, I'll share my screen super quick.
Yeah, please do.
Yeah. Let's see how we can do this here. Oh, you have to allow me to share my screen.
Oh, do I? Okay, give me a second. Let me give you the permissions here. How do I do this? Make you host. The rules keep changing on this. Like, I swear to God.
Mm-hmm. Yeah, they just got the new update. I just got the new updated version on Zoom. So maybe that's it.
I don't know, but I gave you the permission there.
Okay, nice.
Yeah, we got a small group here today, guys. So if you guys have any questions in particular about what we're doing into this long weekend, we're going to do a couple trade reviews, a couple different things. Feel free to leave a comment there. we'll be happy to go over it.
Yeah. So, guys, here's the S&P 500. This is the SPY. This is the option chain, and we're looking at the May 26th expiration options. Okay, so expiring on Tuesday. And so what we see here is that we can sell some of these options we think are going to be a little bit overpriced, right? These options are priced at 17% implied volatility. So it's not that high, but you have to remember, like, these options are not going to see a day of the market open, right? Except for on Tuesday. So it's got 4 days of 3 days of nothing happening, and then we have Tuesday. So let's take a look. What we can do is we can sell, let's say, a straddle or even a strangle, right? Let's take a look at a strangle here. So S&P is trading at 294. Maybe we can do something like sell the 297. Where's our strangle? 297, 291. Right? So for this, we're gonna collect quite a bit. We're gonna collect $2.30.
And then with a play like this, you're kind of hoping it expires worthless.
Yeah, you're hoping it expires worthless, or it stays within your break even.
Mm-hmm.
Right? Like check out our range here. Our range is 288 and 300 on the upside. So as long as we stay in that range. And yeah, if you guys notice something really cool here is that the out of the money put is usually gonna be a little more expensive, right? So here we have, it's $1.20 for the 291 put, and it's only $1.05 for the 297 call. So even though they're really the same distance apart, the puts are a little bit more expensive, right? And for one of those reasons is, well, you're going to be hedging your portfolio and buying the out of the money puts.
Mm-hmm. Hey, Jordan, did you hear that Thinkorswim crashed earlier today?
No, I did not.
Yeah, I saw something on it, and then Dan Veer in the comments there was just letting us know Thinkorswim apparently went down earlier today.
You got to be kidding me.
Isn't that insane?
Yeah. Wow, I wonder why. I don't think there's crazy volume.
I don't know. I know in like something I mentioned to you earlier was like in all the Chinese-based companies that are listed in the U.S., there's a lot of increased volatility on that. Like if you want to go, if you look at like BABA, for example,
yeah,
long term the volatility has gone up, right? Like the market thinks that in the next like 30 days, for example, there's still going to be a pretty sizable move, more than what we're forecasting. But if you look at the near dated options, we're seeing like double the implied volatility.
Oh wow.
Yeah, we're seeing like implying a huge move relative to how big these things actually typically move. Like 10 days to expiration, we're looking at like 60 eyeball.
Interesting.
Andrew, you're using Reddit as your source of information for this?
Oh, don't kill me.
All of a sudden, I'm thinking Thinkorswim never even went down.
Yeah, exactly. Yeah. I'm actually pretty shocked to hear that a big firm like this would happen to them. I use Interactive Brokers. Haven't had a problem with them just yet, but yeah, I'm surprised Thinkorswim actually went down.
Danveer, I might be confusing you with someone else. Are you from Canada as well? Might be our buddy.
Yeah. So another thing we're going to look at here is that's our S&P trade. I'm going to be putting that on near the close. We're just going to be selling volatility, capturing the.
Yeah, I was going to ask you about that. So you want to be doing it near the close when it's as bid as it can be.
Yeah. Exactly. So we're going to be doing it near the close, and just capturing the whole weekend, right? We only have a play on the weekend, so why would we put it on this morning where, something else could happen that's not in our view?
Yeah. So what you're basically saying is you want to isolate the volatility from the weekend.
Yeah. Exactly.
Right.
Exactly.
Like that's really what the protection is being used for, and by having exposure to what happens during the day to day, you're actually. It's like one of those things. It's like when we construct a trade, what we're trying to do is we're trying to take a view on something, right? You buy a stock, your view is that the stock goes up. You short a stock, your view is that it goes down. And in the options world, if you wanted to trade like this weekend, for example, right, your view is that volatility will be overpriced going into the long weekend because so many people are hedging their portfolios that it's going to drive up the price of the options. If you bought it this morning, you're now not only trading the weekend, you're trading today's volatility, right? So if you don't buy it at the close, you're expanding the scope of what you have to consider. And your trade is no longer the overnight weekend volatility. It's now the overnight weekend volatility plus today's volatility. So would your recommendation be to buy it at market close today and then try to get rid of it in the AM on Tuesday?
Yeah, that would exactly what the trade would be. Sell it right before the close and buy it back at the open.
Okay, yeah. Yeah, and Jordan, our buddy Danvir, he's from Markham.
No way.
He lives just down the road.
You're kidding me.
Let's tell him we gotta go for a beer with him when coronavirus is over.
100%, man. That's wicked, dude.
Yeah, Danvir, we got a few other guys from the GTA that have been working pretty closely with us. So we'll definitely have a little PA meetup at some point.
Yeah, definitely. That'd be sweet.
Yeah. So Jordan, do you want to hop into the terminal and see if we can find any opportunities? You want to break down that Nvidia trade? So guys, we had a really good trade on Nvidia the other day. Made a few $1,000 on it. It was just a small position, but it was a really good trade. Made a lot of sense. We closed this out this morning, right?
Yep.
Yeah. It was only like 10 lots, so percent wise it was really good, but we had capital tied up in something else, so couldn't go huge on it.
Yeah.
But yeah, Jordan, if you want to break that down,
I'll do it right now.
Maybe what we can do before we hop right into Thinkorswim. So the reason why we do this, guys, is a couple of different things. We want to show you our thought process for going through trades, and we want to show you like sort of the actual structure we follow when we place trades, because I think a big thing missing in the retail space is people take their strategies for granted and assume that they work and jump right to things like psychology, self-mastery and all of that good stuff, which is important. But we think that there's not enough emphasis put on the, critical thinking element of finding a trade. So what I want to do with you guys for this NVIDIA trade is take you through the exact thought process that we went through finding and placing this trade. And what we really do is we look for three things. It's a 3-step process that we follow over and over. And this isn't some bullshit 3 steps to get rich. This is just, think of this as like a dumbed down version of the scientific, formula, like testing hypothesis for trading. So the first thing that we do is we go out into the market and we scan for market inefficiencies. So we'll go out and we'll be like, where can we find a $5 bill that's being sold for $3? Right? Where can we find a pricing inefficiency in the options chain? It's one of the most overlooked things in options, which is that the average trader is not price sensitive. Right? Whether if they think Apple's going to go up, they want to buy a call. They don't care if that call is $4 or $8. They just want the call. Whereas professional traders and sophisticated options traders come in and go, what's the fair value of that option, right? If the option is cheap, I want to be buying it. If the option is expensive, I want to be selling it. So that's step one. Step two is to understand why that inefficiency is there. Because if we can't understand why it's there, someone might know something we don't. And all of a sudden we go from being the sophisticated trader to the wrong side of the trade. And that's not a position we ever want to be in. And then the third step is when we're going to move into Thinkorswim, and we actually will show you how we structure out the trade. So you find an inefficiency, you understand the inefficiency, and then you structure a trade using options to capture the inefficiency. And if you follow those 3 steps, right, like they're more of guidelines than steps, because every trade is different. And that's really what we emphasize, which is.
Hey, Sean, you're cutting out there, man, or is it me that's cutting out? Guys, am I cutting out or is Sean cutting out there? Well, anyways, I'll pretend that it's Sean that's getting cut out. So what we're seeing here, guys, on my screen is the unbalanced butterfly.
You hear me there?
Yeah, you're like all over the place, so it's really laggy.
I'm lagging out big time here, man.
What's that? Okay. So I'm going to assume it's Sean that's having the issue. So what we see here is NVDA. We bought this butterfly yesterday for $3. So the trade was, well, NVDA just made a new high. And we think that, my research shows that if a stock makes a new high, 55% of the time, it's going to move up and after an earnings event. So we had a small edge, right? 55-45. But what we did after that was we structured a trade that had, so this is what our trade looked like yesterday. So NVDA was trading over here. It was trading at 350. So we set up a trade where the risk to reward, let me just get rid of this. The risk to reward was huge. Okay, if NVDA went down, we would lose $3. But if NVDA goes up, we have the potential to make $16. So that's a huge risk to reward trade right there. And so if you see what happened today, NVDA went up, and the trade that was worth $3 yesterday, today is now worth $9.19. So you made 3 times your money on the trade. Now, I obviously didn't get out at 920, unfortunately. I got out at 650 when this was $6.50. So I only doubled my money and a little bit. But these are the type of trades that we want, where we can structure high risk reward trades.
Hey, Jordan, are you able to hear me?
Yeah. Now you're good. But
Yeah.
it's all fuzzy. I don't know.
Is
But
it still fuzzy?
like the pixels aren't great, but yeah, I can see you. And I can
Okay,
hear
yeah.
you.
Sorry about that, guys. My laptop absolutely sucks apparently, and they couldn't handle the sun, so I had to shimmy on over into the shade here.
Too hot to handle.
It was too hot to handle, man.
Yeah, Sean,
Oh.
take in this butterfly, dude. So remember how we put it on for $3 yesterday?
Yeah.
And I got it out for $6.50 this morning.
Yeah.
Dude, it's trading at $10 now.
No way.
Yeah. So I definitely left some toonies on the table. Well, we're in this. I definitely left some $10 bills on the table there, but
yeah, you left a lot of money on the table there, huh?
yeah, that's a lot of money on the table. But it's okay, right? That obviously we're not gonna be able to pick tops, and we're not gonna be able to pick bottoms, but we want to get the big chunk in between that. And so this was a great trade that we put on yesterday. So that was our NVDA trade.
Yeah, man, like that's such a good trade. I'm sad I missed that recap. I really hope that I didn't cut out before I explained our 3 steps that we follow.
No. 3 steps were good, and then all of a sudden, out.
Just disappeared, eh?
Gone.
Yeah, man. It took me a while to get back on the call because the laptop was too hot. I couldn't pick it up to move into the shade.
Nice. So we'll take a look at a trade that you guys can do right now. How's that sound?
Sounds awesome, man.
Yeah. So right now I'm looking here at SPLK. So they had earnings and they crushed. They crushed earnings. Stocks up like, I don't know, 15%, 10%, 11%. And what we're seeing here is we're making a brand new high. Right? So remember, when a stock makes a new high, my research shows that, over the next week or month, we get a 55% chance that it's up, 45% chance that it's down. So can we structure a trade where if we're right, we make 3 or 4, and if we're wrong, we'll only lose 1? Right? And we have to remember, we're going to be wrong a lot of the time. People think like, oh, I only want the 75% hit rate. I only want the 85% hit rate. Guess what? You don't need that. You don't need that hit rate. Right? Honestly, you probably can't find that hit rate unless you're selling like way out of the money options, which is not a great idea. Okay. So SPLK making a new move to the upside. So let's take a look here. We can structure a butterfly expiring next week on SPLK. Okay, where it looks like something like this. So stock trading at 180 right now. So we're going to buy the 180. Okay, it's called the unbalanced fly. We're going to buy the 180. We're going to sell 3 of the 190s. And we're going to buy 2 of the 195s. So let's check out this trade. All right, so here's our risk reward trade right here. It's very nice. Stock's trading right here. If we go down, we lose $1.90. But we have the potential to make 5 times that inside the body. So that's a trade that I'm putting on, and I'm looking to try to take this off. We'll see maybe $4, maybe $4.50 down the road.
So when are you going to put this one on? Right after this call?
Yeah. I have a small bit, but I'm going to add to the position.
Oh, okay. So you're already in this position.
Yeah, and I'm going to add a little more to the position.
Wow. Putting on the heat.
Yeah. So sometimes I don't like just like going all in on one. Like, I don't like just like going in, at one time, just because sometimes like I never usually catch the bottoms. So I usually like to spread it out a little bit throughout the day.
Yeah. What's that saying that you like? Picking bottoms gives you smelly fingers.
Exactly, right?
Don't aim to pick the bottom or the top.
Don't exactly. Try
Just
to
play the
capture.
edge, right?
You got it. What do you think, Sean?
Sweet man. Okay, so that's that trade broken down. Jordan, what do you want to talk about now? You want to just like was there one more trade you wanted to take a look at?
No. That was it. NVDA, SPLK, and SPY. Those were our trades.
Sure. Okay. Cool. So why don't we take off the screen share and we can just chat for a bit because
Yeah.
I wanted to really talk about what so a lot of the people that come into our lives and they tune in, they see what we're doing and it's a little foreign to them compared to what they typically see when they go onto social media, what they typically see when they research what it takes to become a good trader. So I wanted to kind of talk about why that's the case, right? Why is it that what we're talking about is so foreign to people, yet it's not when you start talking in more professional circles of trading, right? Like the way that like if you were to like go into like a book on options pricing and stuff like that, the way that we're talking is similar language. But when you enter like the retail community, like you go into StockTwits or you go into any of the options groups on Facebook or on Instagram, the conversation's very different.
Yeah, I mean,
so
like,
what do you think's up there?
well, I think it's who you're learning from. So like let's say I'm new into options and I go online.
Yeah.
The people that I'm going to be learning from are the people who are trying to get onto the front page of Google.
Mm-hmm.
Right. So right there, I'm already learning from the wrong people right off the bat.
And why do you assume that's the case?
That they're teaching it wrong?
Yeah.
Well, we've seen their stuff.
Yeah.
Right. We've seen their stuff, and they are promoting you're gonna get rich trading options. They're promoting, buy options for direction. They're promoting options as leverage, high leverage, tight risk. And obviously, we talk about it all the time where that's just the wrong way to be looking at trading.
Yeah. So like, but why do you think like, okay, so like, but why not push the right stuff? Like, why is it that like those are like obviously like posting, like our most viewed video is when we posted about our $10,000 bet on ACB.
Yeah.
Right. So I understand the allure of making money and all of that, but like, why is it that the right education isn't being pushed with that message? Right. I don't think there's anything wrong with the message of you can make money trading options. There's nothing inherently wrong with that message. Where I start to run into a bit of like a moral dilemma is when you're pushing that message, but you're, whether consciously or unconsciously, you're pushing information that doesn't actually get people to that goal that they want, right? They're relying on you to give them a map, and the map you're giving them is outdated. It doesn't get them to like, it's like as if someone came to you for marketing in 2020 and was like, I want to learn how to market. And you're like, I'll teach you. And you teach them how to do yellow page ads.
Yeah.
Right. Like it's marketing, but does it work anymore?
Yeah. So that's a really good point, Sean. And I think so what we see is that you have people who tried trading, let's say for a year, didn't make any money, and then like right away switched over to creating a mentorship. And I think that's probably the best thing to do, is because it's really hard to make money trading. And then so if you can realize that, hey, listen, I'm probably not going to be a good trader early, and you switch over to a mentorship business, well, that's a great way to make money now. And so the guys that are switching from being frustrated with trading over to creating a mentorship, they don't really have the education or the skills required to make it in the game. So, and that's what they're giving back to the people.
Yeah. And you know what, like I've been having this thought recently, like I love everyone watching. I'd love your opinion on this too. Like I think about people who, don't realize some of the opportunities that are out there and stick with what they knew before. And Jordan, you and I have talked about this, but what I think one of the reasons why these mentorships are also tailored around these certain topics that don't really help anymore, right? Like price action, et cetera. Like it's not enough to get you there anymore, is because it falls into the realm of things that are already familiar to people. Right. So like if you look at like the scope of like things that everyone knows, right? It's like if I want to learn about trading, but I can tie it to like certain things that I already understand, all of a sudden I feel like I have a comfortable way to get to this goal. Whereas if if I wanted to pick up, I don't know, rocket science, I have nowhere to start. Right? Like it doesn't fall into the realm of anything that I understand. So if you told me that trading was all math and, you know, statistics and then intuition and like all this. It's all of a sudden, it's like the goal goes from being like, I can follow this easy path that I understand. I just have to put in time to like, now, not only do I have to put in time, but I have to accept that I'm gonna have to push myself beyond what I currently understand. And I'm gonna have to actually learn new skills, things that I have no idea about, to actually get to that goal. The path becomes a little less clear. Right. And by keeping things in the realm of things that people already understand, like pattern recognition and, you know, price, right? Everyone, you know, even if you're not in economics, you understand how price works, right? And if we keep things to these core concepts and delve deep on mastering those core concepts, it's like, it sells.
Yeah.
It sells. And then you know, isn't that's the goal, right?
Yeah. Easy to understand.
And in the end of the day, 50% of the time, your guys are going to make money.
Yeah.
Right. It's always close to 50-50. You could buy anything.
Right.
It's, you know, throw a dart at a board. It's 50-50, you know? But it's like what it really takes. It's like everyone's already like always on the edge, but it's like people don't realize that it's these things that nobody's willing to do, these really hard things to learn that actually tip you over. Right. Like, you know, it's like 95%, you know, like in options, I'd say it's probably closer to like 95% don't make money in the retail space.
I'd say it's bigger, man. I'd say it's huge.
Yeah, I would say almost no retail traders make money trading options in the long run.
In the long run. Yeah. If you go
in the long run.
Yeah, if you put like 100 people in front of me who traded options and we took like, let's say a 2-year a track record of let's say 100 trades, 200 trades, I'd say maybe one guy would like be profitable, not like rich.
Exactly. But I think that when we look at, you know, and like, obviously I'm guilty of this too. I'm sure you are. When you first heard that like 90% of traders lose money or whatever, I guarantee you had this thought at least. Not me.
Not me.
Not going to be me though.
Of course.
Right. But that's the trap, right? The trap is it's like, not only are you thinking, not you, nobody thinks they're the 90% that are losing money. I have buddies that are down like 50% over the last 2 years. Had a winning trade last week. And their thing is not me.
Yeah.
Like, yeah, sure. Like if you don't count that big, you know, if you don't count the last 2 years, I'm profitable. Right. So we all have these ways of not me, you know, but like the thing becomes, it's like, if we're doing the same things as everyone else, expecting different results.
Isn't that what Einstein says is
insanity?
That's what Albert Einstein, is what he says is the definition of insanity, right? It's like doing the same thing over and over again and expecting different results.
Exactly. Right. And like, you know what's funny about that though? It's like trading is doing the same things over and over and over again, but you just need to make sure that you're doing the right things that actually give you an edge.
Yeah. You're buying for 3, selling for 5.
Yeah. The game never changed. It's always been buy low, sell high.
Exactly. And you know, the hardest part about trading, we always say, it's like trading is easy. Once you get going, trading is very easy. The hard part is to be able to understand, well, what is worth $3 and what is worth $5, right? That's the hardest part about trading. The easy part is like, you understand that this is 3 and now you just go and buy it, you know, go and sell it for 5. But being able to find that inefficiency, that's the hard part. And that's where like, you know, that's where like a Bloomberg terminal comes into play, for example, or a quant, or, you know, a whole team at Morgan Stanley. Is that these guys are researching and studying, well, where can I find something that's worth $3, but it's selling for 5? That's the hard part of trading.
Hey, Jordan, what are your thoughts on traders' psychology?
I think it's definitely way overhyped. I mean, it's important, but at the end of the day, it's probably the second most important thing. You know, you need to be able to get a good strategy and then have psychology. Like you put a guy with great psychology, you put him at the roulette table, he's still going to lose money.
Oh, guys. Sorry, Jordan, you cut out there for a second. I'm not sure if it was me or you.
Okay. You put a guy at the roulette table with great psychology, he's still going to lose money.
Yeah, because he's at a roulette table.
He's at a roulette table. He's at a losing game. So you got to get a winning game first, and then we're focused on your psychology.
Exactly. Like, you know, it's one of those things. Like, psychology it's a dangerous game to be heavily focused on it in the early days of your trading, because once again, it's that thing of, you know, the hard part of trading is developing a strategy. Right. And like what I think is actually the best strategy in trading, like the best strategy that you could follow is just become a great trader. Don't worry about, you know,
a particular pattern that you look for, or, you know, a particular buy sell signal. Just focus on mastering the product you trade, understanding what creates an edge, and then being creative enough to find an edge. Because I think no matter what strategy you follow, eventually it goes away, right? Because we're in a market, right? There's market forces impacting what works and what doesn't. And over time, things change. So the only strategy that wins in the long run is the strategy of no particular strategy, of being able to find strategies, of being creative with your trades. And to do that, it's no longer about like, let me follow this 1, 2, 3, except for the 1, 2, 3 that I shared, which is more of a guideline than a strategy. Because then you're not tied to one thing, right? You can actually think critically about ideas, right? You're basically like, you know how like when you go to university and stuff, it's like what you really learn to do is think critically about the world. You basically, university helps you become a man, learn your craft, become a man, become a woman, you know, and you sort of become this like versatile thing where you can now take the education you have and go out into the world, start a career, do whatever you want. You need to think about your trading education in a similar way, where it's like, you don't want to just learn how to, you know, like a cookie cutter pattern that you have to use over and over and over, because of two things. One, eventually it'll stop working. And you're not really a trader. You're a copier, right? And that only lasts so long. You know, people who play that game don't usually last that long. And then two, if things do change and they stop working, how are you going to know? How are you going to know if things stop working, right? Like, are you going to follow the mentor? Are you going to rely on the guy who gave you the strategy to tell you when things stop working and stop paying him? I don't think he's going to do that. I think he's going to tell you to hold strong.
But we also have to remember, like, at the end of the day, like, a lot of people don't want to put in the work to become a professional trader. They want the money, but they don't want to put in the work. And like, that's fine. But at the end of the day, you 100% won't see results.
Yeah, and that's the reality of it, right? Do you know how many people want to become a professional soccer player but haven't got off the couch in 5 years?
Yeah.
We all have dreams.
I mean, yeah, and something, you know, people, I always tell people before they place a trade to ask themselves this one question, like, who's paying me?
Yeah.
Who the hell is paying me here? Why are they paying me?
You know what I'm thinking?
Yeah.
Just had a thought. Here's how you can tell if you should stay in trading or not. When you think about the trades that you have on right now, and you think about what you want to achieve in the next 6 months, do you feel excited or desperate? If you feel desperate, get out of the game. You're in for the wrong reasons. You're not going to make it. Reality. Like, not everyone's cut out for this game. It's just like any game. Like, I'm not cut out to be an engineer. Man, I would love to be making that $250K a year salary right now, you know, building cool shit. Sounds like a really cool lifestyle. I'd love that iron ring. I'd love the clout that comes with it. I'm not cut out for that game. I don't get excited thinking about it. You know, I just want the fame that comes with it. You know what I mean? So like, I know that's not a game for me, so I don't play that game. You only want to play games that get you excited, that you actually love. Right? Yeah. You can make money anywhere. Like, I think that's something people forget. Like, people, you know, get so caught up in this like laptop lifestyle, you know, get rich quick overnight, residual income, making money from my phone. You know, I think people forget to like find something that they actually enjoy doing. Right. Yeah. And I think that it ends up playing out in the end of the day, where the people who love what they do end up winning anyways. And the people who are in it for the wrong reasons end up losing 9 times out of 10. So I think it'll show through in trading as well.
I think it's actually, I think it's pretty funny. It's like, I was talking to a PM about this, and we were saying how it's funny how Robinhood, you know, like, you know, the old fairy tale where he brought the money from the rich to give to the poor.
Yeah.
The current Robinhood platform is allowing people who really don't care about trading. They're coming into the market and directly, you know, putting money into our pockets.
Right? Yeah, giving money to the rich.
Yeah, giving it to the people who are serious about the game and, you know, have been, you know, who are professional traders, right? So this huge pile of money is just getting fed into, you know, a few wealthy traders. And I think that's, you know, it's basically the opposite. And so he was telling me about that, and I was having a pretty good laugh.
Yeah, you're like, oh man, it's the opposite.
But it just goes to show, like, there's so many people who come into this game and really don't care about trading. They like at the end of the day, it's like a casino, right? You know, a lot of people come into this game for the fun of it. There's nothing wrong with that. There's nothing wrong with that. But thinking like you're going to go to the roulette table and become a millionaire, now that there's something wrong with that.
Yeah, now you're in for the wrong reasons. That's what builds a gambling addiction.
Yeah.
Right, and you know, like, don't get me wrong, trading's fun. Whether you make
Yeah.
money or lose money, there's a fun element to it, right? It's just like the number of people that I see on Instagram who have trader in their bio, spend all day talking about trading, follow all these pages,
Oh man.
and either really, really care about it and are doing the wrong things, and that breaks my heart, or just want to get rich. They also have CEO in their bio,
Yeah.
and they're like 15
Investor.
years old.
Yeah.
Investor. And it's like, hey, dude, come on, man. Like, put in the work here.
Yeah. Let's get serious.
Let's get serious. If you like that trading got cool, man, and it kind of screwed up the space for a lot of people who really are passionate about this game.
Mhm.
And that's why we share what we're doing here, right? It's just to get people thinking differently, thinking a little more critically about what it takes to make it as a trader, right? And I think that's, like I'm not bashing anyone out there, like, look, do what you're gonna do, right? But I'm just doing this because of every 10 people that tune into this live, I know there's at least one person that's gonna hear this and go look up how to price options. Go look up the job requirements to actually become a professional trader. Whether you want to be a professional trader or not, you should know that shit, because the skills didn't change. Whether you're managing $1,000 or $100,000, doesn't matter. You still need to know how to price your assets. You still need to know how to find an edge, what's tradable information. Without knowing that stuff, it's like, I'm just learning strategies at a roulette table.
Wow, that's a really good way to put it, actually.
Yeah, like, let that
That's a
sink
really
in,
good way to
guys.
put it. Yeah.
If you don't thoroughly understand the product you're trading, and if you're not doing the things that the winners are doing, you are learning strategies at a roulette table. That's a heavy hitting reality. But it makes sense, right? The guy who sits at the roulette table and goes, 3 blacks just came up in a row. It has to be a red.
Yeah.
But he
Dude.
doesn't realize that the game always has a slight edge to the casino, and that the last roll has no impact on this roll.
Yeah.
They're all individual, unique games.
Or dude, the pattern ones, like, it's like, okay, it was red, red, black, then black, black, red. So in the next round, we're probably gonna see red, black, black again. Like, I've heard that at the table before, man.
Right?
It's mind blowing.
Crazy, man.
It's mind blowing.
Hey, look, it is what it is. I just think that, what really kills me is not if people want to come into this game and gamble and have fun. Don't care. Do your thing. I appreciate the money. But what kills me is the people who come in and put in a lot of time and work to learn strategies and stuff, but don't realize that they're gambling, but don't realize that they haven't actually got that edge. And because it's like, man, you don't want to see people come into a game, really give it their all and do poorly, and not for a lack of effort, but for a lack of either unwillingness to go out of their comfort zone, which, hey, look, if that's you, then like, honestly, no sympathy, but for a lack of like exposure to these right ideas.
Yeah.
You know what I mean?
Yeah, dude, the biggest game changer for me was getting access to portfolio managers, a Bloomberg terminal. That was literally the biggest game changer for me.
Yeah. It's
That was
like
when I realized.
opening the
like-
Pandora's box of trading.
Yeah, I remember, like, that was when I realized, like, holy shit, I'm doing this so wrong.
Right?
Like, man, you don't understand. Like, I used to look at charts for hours and hours and hours. Like, I thought it was like, okay, if I spend 10,000 hours watching these charts, it's finally gonna click. Like, it was such a, like, you would, so take it, like, imagine this, okay? This is how my day used to look. Wake up, spend like 8 hours trading, and then spend 8 hours watching charts.
Yeah.
And then the end of the day comes. Go to bed, wake up, do it again. Spend all this time watching charts. And then if you look at the end of the week, there was no productivity. A whole week of watching charts, nothing changed. Like, my skill set never changed. Basically, I was wasting my life
So why do you think you did it?
because I thought it was the right thing. I thought it was like, okay, well, if I could actually watch these charts, then like all of a sudden, I'm going to start making money. If I can understand these patterns, all of a sudden I can start making money.
Mm-hmm.
And so obviously I'm going to put in so much work if I can, if I can become rich in 6 months, just because I can watch charts for 2 hours a day. Obviously, like, I would obviously want to build up towards that. And it's that's kind of motivating. And you always feel like, okay, wow, I saw this, like, I studied for like 8 hours and then I make a good trade. It's like, yes, like, it's finally working. I'm seeing it. And so that's what keeps you there, right? That's what keeps you at the roulette table. So it's definitely a really hard game to play, but thank God, like as I said, biggest game changer for me was getting access to the Brumo terminal and portfolio managers. That was the number one game changer for me.
Yeah, man. Like, and you know, what is it that like? It's like you need to be, you know, you need to be doing something that 95% of people look at you and go, "What the fuck is this guy doing?"
Mhm.
And the 5% that you actually want to be like, look at you with respect.
Yeah.
Right.
Sean,
So
is there any questions there? Because like, I don't know if you want to wrap this up soon.
yeah, we'll wrap this up soon, guys. Do you have any questions for us? We'll chat for another few minutes, and then we're gonna wrap it up.
Yeah.
You know, sorry for the late start today, guys, but we kept it going here for a bit. You know, I hope you guys like that rant. You know, we sort of, you know, thinking about doing that a little more on this YouTube live, sort of ending off with a discussion just about general trading, how we see things. You know, what were some game changers for us? What mistakes we've made in the past? You know, hopefully just some stuff that you guys can learn from us. You know, get some insight into our worlds of trading.
Mm-hmm. Yeah, it's exciting.
I don't think there's anything more exciting right now, especially with quarantine. Nothing else to look forward to except for the markets.
Yeah, except for your daily P&L.
Except for your daily P&L, baby.
Mine's always red, man.
It's always red.
It's always red.
43% of the time.
43% of the time, exactly. 43% of the time, I'm losing money.
Yeah,
it's crazy, man. Like, I'll show people, I'll be like, "Oh, you suck, man. I got my 90% strat."
Hey, so we got a question here from Danveer, our fellow Markham buddy.
Yes.
He's basically asking about paper trading. He's saying, you know, what do you think on paper trading? You know, I want to get started.
Yeah, 100%. It's like you're practicing, right? You know, think about it. You're a soccer player and you go to training 5 times a week, and then you come into the real game and you're ready to go.
Exactly.
There's nothing wrong with that.
Right. And so I'll add a couple things onto that point for you there, Danveer. I think if you are new to options, you 100% should paper trade. 100% when you start out, you should paper trade, because like with learning any new skills, there's growing pains and there's like rookie moves that people make, right? So like the number of times, like even guys in our group, I've seen them close out the position wrong and take a pretty big loss. And these are things that like no trader should be making, right? Like imagine like you bought a stock and then you're like, I want to sell the stock, and you bought more stock. It's just that like, you know, debits and credits are a little bit different in options because you can be short or long the options. You know, it can get a little tricky, like if you haven't looked at it before in your brokerage. So those are the types of mistakes that you want to make without real money involved, because you're only going to make them once. You should only make them once, if ever. The second reason why I think paper trading is a great way to start out is because more important than making money today when you're starting out with trading is focusing on becoming a really good trader, right? So, and what that means is you need to be getting your reps in. So when you learn, you know, how to take a view on volatility, right? The first thing that we go over with people is how do you take a view on volatility? And when you learn how to do that, more important than just watching me show you or watching a video about it is going out there and doing it yourself. And the last thing you want is that little fear in your mind of like, I haven't done this before. Like, what if I make a mistake, to hold you back from going out and executing? Because if you like, the number one reason people fall off from like the things at least that we've been looking at with them is because they don't place a trade. Everyone who's given up that I've, you know, worked with in the last couple months, the people who gave up never even placed a trade. And I think that is something that does hold people back. I understand why it does, but if paper trading helps you get over that hurdle, do it. Right. And then once you have that down and you're feeling more confident, then move to cash, because there are a lot of benefits that come with trading a cash account. Right now it's real. And that realness makes a huge difference. You enter a position, you start taking a small loss. If you're on a paper trade account, whatever, I'll hold the position. You're in a real money account, the heart starts beating. Your heart rate goes up 40 points. Mm-hmm. Your stock goes down 20 points, your heart rate goes up 40 points. Mm-hmm. Right? So there's a lot of benefits that come with the cash account as well. But the number one thing is get started. Get started, make sure you're learning the right things, you're thinking critically about everything that you take in, and you're testing ideas as you go. You're getting familiar with your brokerage, you're getting familiar with how to structure trades, you know, You're learning where to find different pieces of information. You're in the game. You're not sitting on the sideline watching. You're in the game. I hope that helps, Danveer.
Yeah, and I would also just add quickly to that is, all like the best athletes, they say they practice the way they play, right? So their practice is just as intense as their actual live games. So keep that in mind. Like if you find yourself like slacking on the paper account, like you don't really care about it that much, then maybe trading is not for you. But if you're like, you're focused, you're in it, you're like, okay, I gotta really focus on my risk here, I gotta focus on my money management, et cetera, then and like you're excited about even the paper account, then this game is for you.
Yeah, that's a really good point, Jordan. Treat it like a real account.
Yeah.
Right. Like, that was the big thing. Like, some of the guys that I was talking to, they would have like a paper trade account with like $250,000 in it, and they'd be trading one lots. I'm like, dude, you would never, like that's like trading with like 0.001% of your capital. And it's like, how is this a reflection of reality in any way? Right. You need to be putting up 3%, 5% of your portfolio. How else are you going to know if what you're doing is supposed to work out in the long run? Treat it like it's real. Right. And remember this as well. One more thing I'll say to Danveer is like, trading is a really long game. This is a skill that you like focus more on learning the skill, right? Like there's guys that I talk to who've been trading for 15 years and nothing's worked. But what they're doing is learning different variations of the same shit, kind of going in circles. You know what I mean? And it doesn't feel like you're going in circles because you always feel like you're getting better in some way. But the reality is it's like, are you making like do you have the skill set to make money in this game? Do you actually have it? Right. And it's like, that skill set is not something that's inherent to people, right? They're obviously better natural traders, but like that's more of the intuition side. But like the skill sets, like no one's born a coder. No one's born an engineer. You learn to become an engineer. You can't just feel your way into being an engineer, right? It requires taking on challenges outside of your comfort zone, right? Like, anything good lies outside of the comfort zone. So if you're learning things, hoping to get to a really difficult goal, and everything you're learning is within your comfort zone, you're probably not learning enough or the right things, right? A guy, you don't become sick at anything without pushing yourself outside of your comfort zone, right? You think that a professional soccer player wants to wake up at 6 a.m. and go for a 2-hour jog? You think he wants to? Well, he kind of does because he knows that's how he becomes
make him better. Exactly.
At his craft.
Yeah.
But like, you think he's actually sitting there like, man, I love that feeling of gasping for air. The only reason he would love it is because he knows what it gives him in that.
Exactly.
But it's not like he actually inherently loves that.
I think it was even LeBron James says like, he doesn't love training every day.
But he loves winning.
But yeah, he loves winning. And, there's some mornings where he doesn't feel like it. But he knows that when he's sleeping, if he says, you know what, I'll sleep in, someone's out there on that court that wants it more than him.
Yeah, right? And then he's kicking himself in the ass.
So he gets up, he does what he needs to get done. Same with trading. Gotta do what you gotta do.
You gotta do what you gotta do. Right? You gotta learn what you gotta learn. And like that's what separates the boys from the men in this game.
That's it. Okay, dude, let's wrap this one up.
Okay, guys. Really appreciate everyone that stuck around. Danveer, man, hit me up if you got any questions. We'll grab a drink on Jake's patio or something when all this is over. All right, guys. Thanks a lot for sticking it out. We'll talk to you on the next live. Hey, Jordan, how do I end this live?
I guess I have to end it, right? Because I'm the moderator.
Oh, yeah. You're going to have to end it in the more button.
Stop live stream?
Yeah.